We have had the experience of having to do that, of having to run close to the ground because we never got the like, oh, great idea. Here's $10 million. Go grab, market share. First of all, that hasn't happened for women. Women get really tiny checks and we have to figure out how to make them go a long way.
This is Funded, a show where founders who raised millions in venture capital share the gritty side of what it actually took to get that money in the bank. I'm Jason Ye. Not too long ago, I was trying to get my ideas funded. And back in the day, I was a VC listening to founders pitch me for money. Facing rejection is a harsh reality for many founders going out to raise. It can feel like you're hitting a wall over and over and over again. But sometimes all it takes is one person willing to say yes that changes everything. If there's one thing I know about VC, it's that the domino effect is real. One yes has the ability to push all of those maybes across the finish line to close out your round. Today's guest, Coco Brown, founder and CEO of Athena Alliance, experienced this firsthand while closing her $2.5 million round in 2023. Not only was she able to land a lead thanks to that first yes, she actually filled her round out with female leaders from her own community, customers who wanted to invest in Athena Alliance's vision, showing the power that comes with a strong community committed to your success. But before we get into the specifics, I wanted to hear more about Coco's childhood, which started off on the opposite side of the world.
Yeah, well, a couple of things. One, I was born in Malaysia. I've lived on 3 continents. I was born to, somewhat academics. Neither of my parents have ever worked in a corporate environment. The closest my dad came was to working for the UN for 2 years for UNCTAD, which was the UN Trade and Commerce, the trade. So it was like basically economics. He was a PhD in economics and he taught economics, and he was also a super intrepid world traveler. Like, hitchhiked across Russia in the 60s.
Wow.
Like crazy, like went to Vietnam as a tourist during the Vietnam War. Like my dad is a little like super eccentric. And I grew up in a undiagnosed family, but like definitely a family with a lot of neurodiversity that shaped kind of, I think for me, a more fluid way of engaging with people. Like I can take in lots of different styles and lots of different modes of operating and lots of different ways of communicating. And part of that, I think, is like the family I was a part of. And part of that was because of the family I was a part of, I also have a huge cultural exposure, which is like then translated to my kids. My son is actually double majoring in psychology and Mandarin, and he's he's off to Taiwan for a year, and he's into diplomacy. Like we are a family that sort of subscribes to this concept of one globe, one world, and we have a lot of chosen family. My chosen brother is from Hong Kong. Like we have our Malaysia family that is not really our blood, but yeah.
With that sort of background, growing up, how, and you said you took in a bunch of different ways of interacting with the world and interacting with people. Would you say, as if I were to sort of box you into one of 2 categories, and you might not like this, but would you say you were an introvert or an extrovert growing up? Like how would you describe your ability to interact with new people?
It's funny because I don't remember a lot of my young life, and but what I'm told is that for my early part of my young life, I was very much an observer, very much like more introverted and very attentive to emotions and sort of the dynamic that was going on, and the logic there was like that was natural. I had a father who operated very much like Spock, if you will, and a mother who was very emotive and in some ways, like, I mean, she's Mensa, she's kind of brilliant. Both of them are brilliant, but also kind of, in their own worlds, and
Sure.
a brother who also similarly. So I think, the description of me early life was like having to be a very clear observer in the family. And I was always seen as the one who kind of would pull things together, kind of try to peacemake and bring things together. But then I would say once I got out into the world, I became very much an extrovert. And I someone described themselves as a socially anxious extrovert. And I was like, oh my God, that's me. I'm a socially anxious extrovert. That's exactly right. And I get exhausted. Like
Mhm.
I'm not the kind of extrovert that just wants like gets all this energy from it, but I am extroverted in the world, and so I would say that it is
Hmm.
hard to pin me down in that.
No, I usually like asking that just because of the topic that we're going to talk about requires so much interaction with new people and bringing information out.
Mm.
But before we get there, so with an academic father, and I think you were saying maybe an academic mother as well, where did you think you would end up professionally? Like, is this world of entrepreneurship something that was on the roadmap or something that kind of came up by surprise?
So I remember the first time that I actually sort of thought about that, that I remember. The first time I remember thinking about that was we were visiting my dad we were living in France, and my dad was working at the UN in Switzerland, and he referred to the UN as like the halls of the great. There were these like big hallways, and
Mm.
people would just be rushing down them, and I remember hands waving like this as people walked, and, like big strides, big movements, and everyone was going to lunch at the same time, and I went to my dad's office, and I was probably in 2nd grade, I think, and so I went to my dad's office, and he had all these papers, and I was like, like the idea of moving papers around sounded really interesting to me, a desk and like drawers and pencils and erasers, and this was my one experience with sort of like an office ever, with my parents.
Right.
And so I remember being like, "That I wanna be in business. That sounds awesome." And then I think just my general, sort of I didn't discover this about myself until I had my first real corporate roles, so I graduated kinda I was younger on the younger side when I graduated, but I went like, right after college, right to work,
Mm.
and I discovered about myself that I am extremely ambitious. I never knew this about myself, like, because I wasn't, like, the most ambitious student. I didn't that I didn't take to education the way I took to work.
Mm.
And I'd waited tables, I'd always worked, but this sort of business world where I jumped in first to compensation analysis, and I did a lot of comp analysis and design and right from day one, and super
Mm.
interesting stuff to me, and I realized that I was quick to have answers, I was confident in my answers. I was, I operated on a certain level of like gnosis, and so I ambitiously rose very quickly. By the time I was 28, I was a VP running a very, a fairly large piece of a business. I was VP of professional services, and the company was a professional services company. So I ended up running like 2/3 of the business and all of the delivery without any, real skill to deserve that.
Right.
So, yeah.
So you at some point got exposed, what I heard is like to something that looked like business, and then I think that probably planted the seed, and it sounds like, business was much more of your calling than say academics. And based on what I see in your profile, like you went on this long, distinguished career in business. Um, but you know, I think Athena Alliance was your first company that you were starting yourself. Is that right?
Well, it depends on how you look at it. Back in 1990 uh, 6, 95, 96. So I was, let's call it 25. I was 25 years old. I wanted to build a product. It was early days with HTML. I built this fully customizable standalone employee handbook that had all of the rules and regulations built in that you couldn't change, and then all the things that you could flexibly change as a company, giving
Mhm.
you guidance for what was like the gold standard versus like normal. Like it was pretty cool. And I built it with an engineer, and the VP of engineering of the company, a guy named John Nauman, and he introduced me to a VC. And I literally met one VC, pitched my product, showed them, and this VC said, really great product, kid, but where's your business plan? Where are the adults? Like, what's your go-to-market strategy? And I'm like, what are you talking about? I don't
Oh
even
my
know.
God.
I was a psych major. So I was 25 and I did, that was my first entrepreneurial thing. So actually I went off, I did try to keep building on this product, and I ended up selling the product to a company that was early in the outsourced HR space that no longer exists. I think it was called Simpata, but I sold it for like 80K and no royalties
Wow.
and moved on. So actually that was the first one.
Okay. That's
And
cool that you dipped your toes in, but then call it, I don't know, 20. Go ahead.
no, because there was a second one. So
Oh,
the
wow.
second one, Satya Nadella calls himself a refounder of Microsoft, which I think is fair. So I would say I was a refounder of a company called Taos. So
Hmm.
I became the vice president of professional services. The company grew to about 100 million in revenue. Then we died. We crashed to 10 million in revenue. I had to lay off, like I have the dubious distinction of having laid off like 1,000 people in my career. And I'm not exaggerating. I had to
Wow.
lay off about 700 people in that instance. And the two owners of the business came out of retirement and basically said, "Hey, nice to meet you, Coco." I did know them, but we want you to do a turnaround, and you're going to become the third owner of the business, and we're going to make you president and COO of the company. And the
Wow.
entire company reported to me. So, and then I ran it for the next 10 years, and I grew it back up to over 50 million in revenue. I was on the board. I was one of the three owners. So in that sense, I'm a refounder, pulling the phoenix out of the ashes and growing that business. Now, we never took outside funding. So we were completely self-funded. We never went for venture capital. I didn't even know really what VC was and private equity was
Right.
until Athena. So now, yes, true, Athena.
Okay, so we almost get to the present day, but there is this, from what I can tell, maybe like a 6-ish year gap between Taos and deciding to do Athena. And, we don't have super accurate information. We can only go by what's announced and stuff. But it does look like your first round of capital was announced in November of 2020, which usually means like roll it
Mhm.
back a little bit. You were thinking about fundraising either right before or right after the world kind of changed. And so I
Yep.
wanted to ask you a little bit about leading into that. You've decided to start this company, Athena Alliance. Did you know it was going to be something that you would have to raise capital for, or is that something that you discovered a little bit into starting the company?
Yeah. I started first in 2016 with a nonprofit, which, by the way, I would highly recommend don't do. Um, get really clear on what the right capital structure is for your business. And just because the business does good does not mean it should be a nonprofit. And I discovered that like kind of, it's a really hard thing to unwind and to convert a nonprofit into a commercial company.
Hmm.
And so we really had to rebuild from scratch in January of 2021. What we did do though is we started with a little bit of a starting point, which was largely our reputation. I had been building a reputation with Athena as this nonprofit that was helping women get on boards. And so it's been this long period of time where I've been out in the market, and Athena has been out in the market as a thought leader, as a partner to women, as an organization that helps, achieve the last mile goals. But in terms of actually a commercial company, we launched the commercial company January 1, 2021.
Hmm.
And I had been trying to fundraise for that for a while before that, because it took me a long time to to go through this process, which is a whole other story with kind of nonprofit to commercial. And I really struggled with the venture world in trying to raise money because the venture world was like, well, wait a minute, what's the nonprofit story in this? Like venture, traditionally venture like has a very formulaic way of looking at the world. And if you bring in an outlier, an odd outlier, it's like, okay, pass.
Right. Yeah.
Don't get it, pass. So what I did was I actually had, and I think this is extremely important early days. Like when you think about it, the earliest days of raising money, the entirety of what people are putting the money into is you and your idea. Like that's
Mhm.
entirely what it is, right? So you really have to have a great idea. And you also have to have people who really believe in you.
Mm.
And sometimes you can find those off the street because they've been thinking about that idea too. And then they look at your track record and they're like, oh, Coco, wow, you built a company to over 50 million in revenue. You're not new to this game. Like they might be able to buy in. But the nonprofit thing was really getting in my way. And the other thing that
Mm.
was really getting in my way was this woman thing. Like, because if you think about it, traditional venture capital
Yeah.
is 40% of VCs come from Stanford or Harvard, 80% are men, and 70% are white, right? So I'm not speaking to my audience at
Yeah.
all,
Yeah.
right? So what I did in that first period of time, it took me about 2 years really to raise the first 250K.
Wow.
And it started with this guy, Mike Gamson, who I'm forever indebted to, who said, Coco, why do women take perfectly good business models and make them nonprofits simply because they do good?
Oh,
Yours
wow.
is a commercial company. You need to make it a commercial company and I will be your first investor. And he was right because I was struggling so hard with this like nonprofit model and something that most people don't want to give nonprofit dollars to
So you
because it's like
actually went down the path of trying to raise from venture capitalists as a nonprofit.
while I was still a nonprofit saying, I'm creating a commercial company. I need funding to do that.
I see.
And look at what I've been able to do over here in this nonprofit space.
Mhm.
That nonprofit needs to continue to exist in some form or fashion, but the commercial company looks like this. And, they were like, what? Complicated. No, bye.
No, I mean, Coco, that is such a good story to tell, and there's variety of versions of this story that I see happen all the time within fundraising. I mean, it's not always the idea that the fact that a founder has a nonprofit over here and is trying to do a commercial thing over here. It's that they just have a complex organization to what they're doing. And you said it before. It's like VCs are kind of you didn't use these words, but VCs are a bit simple-minded in how they think about the world, and it's like one way. And even though you might have been able to like run a company and grow it with a nonprofit org and a commercial org, that's up for debate, but you might have been able to do it. When you go tell that story and a VC is like, why two things, where, what,
Yep.
I have
Totally.
100 other deals to look at. I might as
Yep.
well pass on this one and
Yep.
go with one that is just a little bit, easier to understand. So that's very cool that you
100%.
saw that. So then
Yeah.
you ended up deciding to take Mike, right? Mike's advice?
Yeah. Mhm. Yeah, I mean, it wasn't like the only one, but
Sure.
it was it was a critical moment in time of like, yes, but I've been thinking about that and you're right. Um, and then, just enough people saying, I hear you. That's right. Tony Towns Whitley, who's one of two Black women who runs a Fortune 500 company. She's amazing, and I remember talking to her about this and saying, "This is what it should be a commercial company." She's like, "Absolutely, it should be a commercial." Like, so there's
Mm.
enough people, like, validating, "You're right. I get why you're struggling over here and why it needs to be this," that I was like, "Okay, I gotta go do this."
Amazing.
And then, I had, like, 5 angel investors. So it wasn't, like, big money, and, like, it was 50K checks and 100K checks, um, and that just got me started. I closed that money closed for me in January. It like hit the bank account in January of 2021, and enabled me to do something else that VCs don't want to do, which is fund the past. So
Mm,
so a big part of the issue was I needed to essentially pay the state of California for the right to do this, right? Like, because a nonprofit is not owned by the person who creates the nonprofit, it's owned by the state the nonprofit exists in. So you kind of have to also negotiate with and work with the state. It's sort of complicated. You don't have to, but it's the right thing to do to make sure that all parties are taken care of properly.
wow.
And then
So
interestingly enough, like 9 months later, we got an offer to be acquired for, all in about 11 million. And we didn't do the deal because in the end, I had to ask myself whether enough time had passed and enough was different to be able to really justify that now the owners of this commercial company could take this kind of a exit off the back of what had been a nonprofit. And so we said, no, we need a lot more distance from that. And we need to really grow this business and
yeah.
make it into something before we kind of do that.
Wow. So there is this, I mean, there is this really like jump 2 feet in moment where you're like, you cut loose your ties to the nonprofit. You go raise a little bit of money to then essentially buy the rights to go fund a path forward, and you've taken on people's money. And so I mean, I think there's like a real like intense moment of now we're really doing this. And, there was an offer to acquire the company even early on, but it's like, no, we need to really, really go after this. Passing up on an offer that would have been life-changing for Coco shows the commitment she has to her work at Athena Alliance. As an investor, it's always a good signal when a founder shows that they're in it for the long haul, instead of just a quick exit. After the break, we start getting into the details of the $2 million round and the lead domino that changed everything. Like many of you, my last venture-backed startup was a SaaS business. In that company early on, we had the opportunity to sell into a large enterprise, but ran into some walls when they asked us if we were SOC 2 certified. Not only were we not certified, we also found out that it would take our small team a ton of time to get that done, and so we ended up abandoning the deal. If you haven't run into a situation like that where a potential customer or investor is asking if you're SOC 2, HIPAA, GDPR, or ISO 27001 certified, you probably will soon. But unlike me, you could use a company called Vanta to help. Vanta helps automate up to 90% of the compliance work, getting you audit ready in weeks rather than months, and eliminating up to 85% of the costs. Not only that, but Vanta can start small with you and scale up as you grow, helping you land bigger deals and earn customer trust. The best part is, Vanta is offering funded listeners $1,000 off for going to vanta.com/funded. That's VANTA.com/funded for $1,000 off your service. Check it out. So I wonder
And
if you
that would
could
have been life-changing for me too, that acquisition. So I'm like, but
oh my
but
God.
no, yeah, you make those decisions like,
Yeah.
gosh, no.
So what I'd love you to share is one, this is a good time for you to say, so what is the Athena Alliance going after? And then, what are
Yeah.
you driving towards that actually triggered this moment of, okay, we're going to raise another round of capital, this most recent thing that was announced.
Mhm.
And would love to hear that sort of backstory. So first, like Athena Alliance, what are you guys doing?
Yeah, so we're reinventing the way that learning experience exists for senior leaders. And
Mm,
we're saying to senior leaders, you can have a 40, 50-year career. And in fact, actually, you may have to, or you may want to. So we've created this incredible concept around a portfolio of impact. And then we're creating the university experience, which is digital first, for all of the dynamism around learning and achieving your goal. And then, of course, we have a career center, which is like a university, which means the outside world comes knocking on our door and says, "Oh, we have incredible opportunities for the people in there. Can we share them with you?"
Mhm.
So so Athena is a combination of peer groups and courses and salons and a Netflix style library, and it's a real technology platform we've built from full stack engineering, and so it is this incredible subscription model experience where you can add things onto that subscription that create your own program towards the goals that you have and towards filling out your portfolio of impact.
Got it. That's a broad mandate and one that I've heard a little bit about. I used to work for Alan Patrickoff, who launched a firm called
Mhm,
Primetime Partners. Part of
mhm.
his thesis is that like the career and the life of people is going to be far extended, like well beyond what we're used to. And so things like this, where you create an opportunity to have professional and academic advancement, like in your 40s and 50s, makes a ton of sense to me.
Yeah.
When
Isn't he part of Greycroft
he was the
as well?
founder of Greycroft, yeah, but he
Yeah.
he started Primetime after that. So,
Yeah. Yeah.
um, but anyways, so it's interesting that this started as a nonprofit. You essentially buy back the rights to do this, and you are essentially going forward and saying, we need to hit certain marks, we need to do certain things, and then get ready to raise another round. You raised another round of capital, a little bit more money in looks like 2023, which is not an easy time to raise capital. And so I wonder if you could rewind a little bit and tell us, you know, what was happening within Athena Alliance where you look to your left and your right and you're like, this is the time to raise capital. Was it you were hitting certain marks? Was it you were looking at your runway and you're like, we have to go out now? Because it was a very interesting time to raise, I think, when you decided to go out.
Yeah. Absolutely. Um, yeah. So what happened was in the late fall of 2022, we raised a convertible note and I had been, essentially we were self-funded and we definitely needed capital. And one thing I'm really, I don't know if I'm knock on wood, don't want to mess with myself on this is, well, one thing I'm really experienced at is capital efficiency because when I ran Taos and I had to pull the phoenix from the ashes and rebuild the business, like we were totally self-funded. So I have a natural eye toward capital efficiency, which also translates to like if you imagine cash runway, I can run the airplane very close to the ground for a long time,
Mhm.
but that's exhausting, right? It
Yeah.
doesn't give you a lot of ability to look around and see the scenery, right? You're just like, "Oh my god, I hope some bump doesn't come up," right?
Yeah.
So we have had the experience of having to do that, of having to run close to the ground because we never got the like, "Oh, great idea. Here's $10 million. Go
Yeah.
grab, market share." Like that just, first of all, that hasn't happened for women. Women get really tiny checks. And we have to figure out how to make them go a long way. So my board and I got completely exhausted by the traditional venture capital experiences. And I had one person, I won't name them, said, "You know what? I'm tired of this. I'm an LP in so many different funds too, and I keep going to the LP days, and I'm just sick of it." And she's a woman. "I see what you're up against, Coco. Nobody gets it, and we're building a rocket ship. We're building something amazing. I personally am going to write a 500,000. Actually, she ended up writing $600,000 check."
Wow.
And it's like a big gulp for her. It was the biggest check she'd ever written, and she's like, "But we have to do this." And
Mhm.
the crazy thing about that is as soon as one person says they're gonna do it, the others are like, "Oh, I'll write that check. I'll write not that check, but I'll
That's
write
that's
100K. I'll
pretty
write" like,
insane, right?
all of a sudden, like, people who are like, "Hey, I'm not sure. I'm sitting on the sidelines." They get suddenly are like, "Sure, I'll write the check." Like,
Yeah.
so getting that first anchor is so critical. And then in 2023, as you're saying, since this was a really hard time, in 2023, what I did was I was like, "You know what? It is a hard time." So I'm going back to those sort of roots again, like who is going to write a check?
Mhm.
It's going to be people who passionately believe in this and who are experiencing it. So I went out to our own community and I said, "Hey, this is an amazing opportunity. And you writing a check is going to get us to the next point, and that's going to look like this. And don't you want to be a part of this?" And so the raise came from, 80% of that raise came from our community,
Mhm.
So like my cap table is mostly people who are members of Athena who've experienced it, and a few guys who have gotten their board members from us, like, that's what my cap table consists of. And so rather than beating my head against, like, a really bad venture, in climate, and again, I would say for people raising right now, it's similar. Like, what I did with my board was because we are raising now too. And so what my board and I did was we first went on a VC listening tour, and we went out to a bunch of different VCs and we said, what are you investing in? Even the ones that are in our, where the core thesis might map to us. And then we also asked questions like, how do you feel about the flagship in our area, right? Like the flagship in our category, if you will, is a company called Chief, and they're not doing well.
Mhm.
So what are you thinking as a result of what's going on with Chief? And so we just like built first we did the listening tour. What are you investing in? What does it have to be? What are the metrics that you insist on? And how do you feel about the flagship in the category?
Mhm.
And I call them the flagship because they are the Goliath, but they are not the winner in the category right now.
Mhm.
So based on that, then we got together as a board and we said, do we believe we can raise right now from that environment based on what they're telling us? And we're like, maybe not. It's not a good time to raise from venture right now,
Yeah.
given what we're seeing about what venture wants to invest in and what venture thinks about the category, the anxiety venture has about the category, right? So then, okay, so how would we raise differently then? Who would be? Because we as a business are an incredible bet right now.
Yeah.
Our ARR is great, our LTV to CAC's great, our growth rate's great, like, all these things are great, but we still believe that we would have to go out and talk to 100 VCs to get one yes, right? Like, so do we have the time for that? Do we have the energy for that?
Right.
Because otherwise I could just spend my time and energy on revenue, right? Because 'Cause I'm super close to break even, so just focus
Yeah.
on revenue, like, you've got the trade-offs, right? So, but at the same time, we also have ambitions around, like, if we could get more injected into sales and also our roadmap, there's a component of AI enablement that is super interesting right now in our model
Mhm.
because of all the data that we have, right? And what it could do to fast track to insights and connections and things like that. So I want to raise right now. So who do I get that money from? And so I'm starting with, okay, the family offices, the high net worth individuals, like that's where I've got to go because there's passion there for the story.
The thing that I wanna highlight, which you just described, is very smart and strategic when it's like, what is the audience of venture capitalists that we would probably be talking to look like? And how are they thinking today? And the thing that I wanted to call out is what you did in a very specific environment, which is like, not the best fundraising environment outside of AI. Also not the best because of what you said, a flagship company maybe not doing well. But your thought was like, what is the psychology of investors right now? And how do we fit into that? Right. And I want to call this out because it's like a very smart way to be thinking about because whether or not you are in a, for lack of a better term, a challenged category within venture capital's eyes, whether that's that or something else, I think in order to be great at raising capital, you do have to do that always. You have to be like, what is the environment? Who are the VCs? What are they going to be looking for? And do we fit what they are looking for?
Yep.
If not, we can do two things. We can try to change what we are, or we can be a little bit more measured about it, like you've been, and say, this might not be the path for us right now. So, what is like, who are the types of investors out there that might be interested in what we're doing, given great ARR, given great CAC to LTV ratios? And so, I love that as like just a model to hear about, because you're sort of avoiding banging your head against a wall, just hoping that you'll change a psychology that is pretty baked right now, right?
Yeah. Yeah.
I think
And I think the a big thing that I'm learning about traditional VC, right? Like, and this is the other thing where I'm on my own podium about is to the extent that it's true, the traditional VC comes very concentrated from two Ivy League universities, very concentrated in one gender and very concentrated in one race, then and on top of that, VC has a formula. Like over and over again, VC has a formula. There's the rule of 40. There's always a formula, right? And because like you said, I talked to one that's like, we deploy $1 billion, and obviously these are later stage, but we deploy $1 billion a year to 17 companies, right? Like, look at what the VCs do. They don't deploy a lot of, they Northwest Venture Partners has 250 companies in their portfolio. So just think about like the odds. The odds are not great. So it's really important for entrepreneurs who have very little time, to waste. It's very important for entrepreneurs to say, how do I increase my odds by making sure I'm spending my time in the right places
Yeah.
when I go after funding, and get creative too. Like, what are the alternative sources of funding? Should I be going and funding through Clearco? Should I be, because one thing that's not available, this is another thing that's crazy for underfunded entrepreneurs, which is if you have VC funding, you can get venture debt. If you
Hmm.
don't, you can't. Like, it's almost impossible to get like sort of different debt vehicles, like a term loan. It's so hard. So you have to figure out there are lots of systems out there
Hmm.
that you can tap into. Like, go dig into that and get more targeted in terms of your approach.
Yeah. Coco, like, given the story that you've told, like, seems like a lot of twists and turns as you're flying close to the ground and, getting capital to raise up and giving yourself some breathing room. Are there any like particularly challenging memories or difficult memories about fundraising that you're willing to share? Anything that like still kind of cuts deep?
Oh yeah. I mean, one of the one of the hardest things I think about fundraising is that as an entrepreneur, you have to hold two truths. One is this dogged belief that what you have is incredibly valuable, and you need to hold on to that optimism and that excitement and that and all of that, because you are the number one salesperson for the company, right? So you're out there selling, getting revenue, pumping up your team, all of this, while the other truth is you're getting knocked down on an constant basis by these people who are like, "Nah, it's not that great,"
Yeah.
"Nah, gonna pass, nah," like, so you get knocked down. Well, this ratio, actually, we would have expected to see more of this and more of that, and
Right.
so
Right.
you're, like, miserable. It's like Jekyll and Hyde, like, or bipolar, I don't know, but you're, like, miserable on the one hand, and yet you have to maintain incredible excitement on the other, and that is exhausting,
Yeah.
and that's what this one person saw me dealing with, and she happened to be a board member of mine. And she saw me dealing with this. Like, I am breaking down, I'm in tears. Like, I can't, maybe I don't have anything. Maybe it is worthless.
Yeah. Yeah.
When I know that it's not, right? Like, so
Right.
I would say it's not like, there are definite moments where you're like, I can't do another, where in the middle of the day, you like lie down and you just have to take a nap, like, you're just exhausted, and it is so hard. It is
But
so
you know,
hard.
and I don't like leaving the founder and the interviewee on that note. I usually like trying to juxtapose that, and I do want to
Come
hear, like, do you remember where you were when that board member was like, "I'm so frustrated alongside you. Like,
Yes,
I'm gonna commit, 600,000 to give you some breathing room." Do you remember that feeling?
100%. I mean, you might have even seen it in me
Yeah.
just now, like, that, like, like, it's like catching your breath, it's
Yeah.
like that, oh my god, it almost brings me to tears right now, like, it's like, "Thank God, okay, thank you." Like,
Yeah.
and, um, because it because ultimately, like, what it says to you in that moment is someone is willing to do this, and also, like, the feeling for me is it's about effing time, right? Like,
Yeah.
someone had to do it,
Yeah.
and thank you for it being you that did it, and someone should have. Someone should have. And that's what she said, it's like, someone has to do this.
Yeah.
Someone needs to do this.
Well, Coco, I mean, they sort of wrapping up the interview on this roller coaster ride, and it is very typical of the founder journey, especially the venture backed, the investor backed founder journey, where it's these really high highs and really low lows, and you get all this whiplash. Um, but like even seeing the look on your face around like what you're working on, what you have in front of you, it's like it's very obvious that it's worth it, and that like that one glowing bit of optimism still shines bright. And I think being able to share this with other founders of like, if you're experiencing this, of this, like, I know I have this confidence in what we're doing, but I keep getting told this stuff, like, and keep getting knocked down, that like we're all in it to keep pushing forward and finding that one believer, and that one believer then ends up being a lead domino. And so this is very encouraging, very inspiring. We're excited to see what you're able to do in these next few seasons at Athena Alliance, but it seems like one of those companies where once you get past that escape velocity, it's like, the sky's the limit. So Coco, thanks so
Yeah.
much for finding time for us. It's been great.
Thank you. You've been fantastic. It's been fun talking to you. Really appreciate it.
That was my interview with Coco Brown, founder and CEO of Athena Alliance, the leading community for women leaders unleashing their impact. I hope this episode showed you that even if you don't fit perfectly into venture capital's standard box, you can still get funded. Next up, I'll be talking to my producer, Paige, to hear what she thought about what Coco had to go through to get her round across the line. If you're a crazy busy entrepreneur like me, I know one thing's certain: you have too much to do. Of course, you'd love to hire someone else to help, but I bet you think you can't afford it. It turns out you can, especially if you use a recruiting firm called Agent, like I have in recruiting my last 4 team members. Agent specializes in recruiting overseas talent. Now, I know what you're thinking: not another virtual assistant hiring agency. Yes, they can help you hire assistants, but they can also help you hire skilled talent like marketers, designers, and even engineers at a fraction of the cost. Now, if you're looking to add more leverage to your team, check out fundedpod.com/agent. That's AGENT to add your next team member. You can thank me later.
Hi there, Jason.
Hey, P, how are you?
I'm good. I am always excited to sit down and do these because I think it kind of adds a little bit of a layer of a different perspective, or someone who is, I do listen to a bunch of this stuff now, but I still don't know that much. And there's still a lot of things that come up. And there was a few things in this episode that were a little bit confusing to me. So I'm very happy I get to
Hey,
have my clarification on them.
Paige, this is why we do these, right?
Mhm.
I mean, I think you're like, I know some stuff, but I don't know everything, and honestly, I think now more than a lot of first time founders or aspiring founders, and they're just a little bit too shy to ask. So that's why we do these. I'm glad we're here.
Yeah, I'm very happy I can do that for them. This episode was cool because I've never heard of, so far, at least, of a nonprofit transitioning into a commercial company and then raising funds. So I feel like it was an interesting start hearing of that. Let me ask you quick, like, have you ever seen any other examples of this where a nonprofit has made this transition?
Definitely not.
Okay.
I definitely have not, and not something that I would expect to happen. But also, once it's explained to me, I can see how it might happen, but certainly not common.
Yeah, okay, that's what I thought. And she also had she had a background that made sense in terms of where it ended up leading her, and there's a lot of things I don't know, like, just a lot of crazy things that she accomplished that we might have not even picked up on before the, interview started. Like, she ended up building a HTML, like, customizable employee handbook product and had her first, like, run-in with a VC and pitching a VC, and then she ended up selling that for 80K, and then she also ended up working at a company called, Taos for about, like, 10 years, and she experienced, that company kind of crashing down to 10 million in ARR and ended up becoming COO and building it back up to $50 million in annual recurring revenue, which I just think is like, what a playbook, to lead you up until now.
Sure. I said this before we even started recording, but I'll just say this, and I don't think Coco would be insulted if she heard this. Like when I first started doing research on the company before, getting into an interview with her, at first blush, I was like, this is the type of business where I'm like, if I don't know more about it, it is something that an inexperienced founder might do, that they just want to support women or they want to support a certain path, but haven't thought through all the business implications. And then you get into digging into Coco's past, and it is extremely sophisticated. It has a ton of experience, which actually probably lends itself to being great for her fundraising story because of exactly what went through my mind, which is like, oh, I wouldn't really want to invest in a business that looks like this. But then you see the background of the founder and you're like, is there something she knows that I don't know? Like she wouldn't be doing this and she wouldn't be raising capital if she didn't actually see something, which creates so much more intrigue. And I think intrigue might be one of the more powerful emotions that you can stimulate within an investor's lizard brain. So she does that quite well.
I liked that call out that you just made of like your first assumptions because and how you were able to actually like be curious enough to explore past that and be like, oh, there's something here. Because something that she talked about, she really struggled with was every investor just kind of stopped at that for a while. They were like, I don't get it. It doesn't fit in the status quo. You said too, you don't see a lot of nonprofits making this transition. Like it's hard for an investor to wrap their head around. So it definitely took a lot of grit and perseverance. And the thing that ended up kind of pushing them over the edge wasn't really a VC at all. It was actually a female LP. She didn't say who was, an LP in multiple funds. And she basically was like, hey, this needs to get funded and no one's doing it. So I'm going to
Yeah.
put down, this is the biggest check she ever wrote, like a $600K check. And the funny thing is, which we always see this happen, as soon as someone says, I'm all in, this is huge for that woman. Everyone else is like, oh, I'm in, I'm interested. And then she was able to, I think it was Leona's Capital, then ended up being the main VC firm to lead it, and other people piled in as well. And it's just one of those things that's like,
The domino effect is undefeated, if you will. I will say it's just it's a funny thing around human psychology, investor psychology. The thing that I will highlight here is that when we're making these investments, when venture capitalists are going in there, they are betting on a very uncertain future. It really doesn't matter how experienced the founder is, how much has been built to date. Whatever you are investing in is about the future, right? And the future is unwritten. It's not etched in stone. So it's all these guesses, which means that any investor, if they're the first investor, is going to be like, I don't know. And everyone considering it is going to be like, I don't know. But the moment one person has the courage or conviction to be like, I do know, I am going, then everyone who's hanging around the hoop then gets to go, oh my God, yeah, I thought that too. And then as they have the like conviction that comes from seeing someone else credible lean in,
yep.
then they start digging into the story a little bit more and they start connecting the dots in their head, right? They start justifying, they start creating stories for themselves that make sense. And they're like, oh my gosh, yeah, well, Paige invested. And then they look at Coco's background, they're like, she did all these things. She is experienced. She must see something. Yeah, definitely. Let's do this. And then the snowball starts really rolling.
That's why people like this LP are so important, I feel like, in this world, because it's obviously with anything that's like, society's always changing and things like that. But with anything, you always need someone to kind of take the first step. And there is a lot of businesses that maybe in the past would have been considered like non-venture backable. And it's really cool to see people that will be like, no, let's push the limits. Like, let's actually evolve and try something else. And I like how she was able to give Athena Alliance that same shot. I thought it was really cool.
Yeah, totally. One thing I will say is we want as many people building businesses as possible. And we want investors coming to the table trying to back as many types of businesses and as many founders as possible from different backgrounds, give people a shot that they deserve. But everyone also needs to understand that Coco had to have a vision about an actual venture scale business. This isn't to say that you should start a random small business and then think that you should go after venture capital style dollars. That's not what we're saying here. But it is nice to see that when people do have big ideas that don't look like what everyone's used to seeing, that there are people like this, initial domino for Coco that will push the ball forward and get things started for sure.
Another thing I kind of pulled out that I noticed was a huge green flag that I'm sure some investors ended up recognizing is they actually, Athena Alliance earlier on got offered to, like, someone wanted to acquire them for, I'm assuming, a very nice life-changing amount. And that was one of those things too, where she and her team decided, like, no, we really want to build this out. We don't just want to take the easy exit. And that is just something
Huge
that
signal.
totally is like an amazing signal for investors, whether it's the next round or for this round that she had closed, of like, oh, they're not looking to just, just get out and turn a quick dollar.
There are a lot of like close cousins to that, but anything that you see where a founder is trading definite dollars for future uncertainty is a huge signal. It's like anytime you see a founder making a sacrifice for the business, for the future of the business, that's what you want to see. So it can be, this is a big one, right? Turning down an acquisition for dollars today for sure. But it's also like when you see a smaller version of this is when you see founders walking away from high paying jobs, right?
Yeah.
When you see founders stepping away from a cushy lifestyle, when you see founders investing their own money, putting those things at risk. So putting their own money, their own opportunity cost at risk to do the business, those are these sacrifices that VCs look for as a signal of like, oh, there's something that they really believe in here. This isn't just a tourist stopping by or someone doing it because it's the cool thing to put on their resume.
Yeah. And something just popped into my mind that kind of pulls the conversation back to what we were talking about before with the female LP. I'm curious. I don't know if I fully understand how. So an LP, invests in a firm to hopefully get returns, but they're also able to invest in other side. Is that considered like an angel invest? Like, what would that be considered?
Yeah. I think you just don't have to blend the two. It's like the same way as you could be a podcaster and you could also work a full-time job, right? Just kind of pulling out examples there. So an LP, a limited partner, is just the investor in a fund. And that person has access to capital. They can also do direct investments as angels into companies. So they're just different ways of investing that happen to have different titles.
And convertible note. She mentioned that they had a convertible note. I think it was in 2022. And I've heard this so many times, but I still don't understand what it truly is. So maybe if you could just shed some light for me.
Of course. So you've heard of the idea of equity investing. Equity investing is kind of this common, more structured way that investors will put money into companies. Through equity investing, you take actual ownership in shares of a company. And in order to do so, there are a number of legal steps and corporate structure that needs to be put into place in order to actually execute all that. So actually, when you're doing a formal equity investment, there's a lot of time that needs to be spent. There's a lot of dollars with lawyers that need to be spent in order to like stand all this up.
Okay.
Many, many years ago, like 10, 20, maybe even 20 years ago, we've referenced this in the past, so I should have this factoid off the top of my head. People realized that there was a need for a faster way to make an investment in a company where they didn't have to stand up all this like infrastructure in the company, corporate infrastructure, legal infrastructure. And so the first version of that is something that was called a convertible note. So it was a way of investing in a company that was much quicker and it looked a little bit more like debt. And it was called a convertible note because this note, a note is another term for debt, would convert into equity when the next round of equity actually came in. So if I invested today on a convertible note, in 2 years, if someone said, oh, I want to invest and I actually want to invest in equity, my note, my debt would then convert into equity and we'd all be owning kind of like the same type of shares, more or less. But there were small things about the fact that it was technically debt that made that vehicle have some issues on the margins. For example, if you think about debt accrues interest. That's how most debt actually becomes something that investors want to invest in.
Sure.
And there's usually a maturity date, as in after a certain amount of days, months, years, it becomes mature, as in you need to pay me back. The convertible note was never meant to actually fully be paid back. It was always like, well, we're investing now and the maturity date is like 4 years out. We assume that we will raise a round of equity by then and everything will convert. And that's what we're expecting. But it turns out on the margins, sometimes that happened and sometimes that totally screwed over companies. And I've actually was a party to or privy to seeing this happen where people had investors on convertible notes, assuming they would never ask for to be paid back. And someone who was holding a convertible note was like, no, I need you to pay me back. Legally, you have to pay me back. And they didn't have the cash to pay them back. So while the company was actually doing okay and, progressing towards potentially raising the next round of capital, they didn't have the cash to pay this investor back. So it went under.
Oh. So be careful who you allow to give.
Always this is a great story, great call out, which is like, always be careful who you're going into business with and whether or not they have the same expectations as you, that you're on the same page. We're drawing the story out, but I will tell you where it fits into your modern day investing and what most people know today. So people saw these issues with convertible notes and actually Y Combinator, YC, took steps to improving on this and addressing this. So they came up with an investing vehicle called the SAFE, which is essentially the next version of a convertible note. It removes the vast majority.
Is it more safe?
Is it more safe? Good joke. It is definitely more safe for founders.
Okay,
it is
good.
more safe.
That's a good name then.
Founders. So the fact that Coco was on a convertible note, you didn't know what that was. It didn't mean that they've completely eliminated convertible notes. Like some people will just say, this is how we're raising money. And so it might have happened because an investor said they would invest, but they wanted to invest on a convertible note. And those things still happen. It's not the worst thing in the world. You just have to understand what a convertible note is, who's investing with you on the convertible note, and what the terms are so that you're aware of these things as they come up. So,
wow.
Ending this debrief on a very technical note.
I was just going to say that is definitely the debrief because I need to absorb everything that you just
You need to take a nap.
Yeah.
That's the debrief.
Yeah, that is the debrief.
Awesome. If you're looking for more insights, strategies, and support around fundraising, subscribe to our newsletter. It's at fundedpod.com/newsletter. And find me on social. I'm at Jayeh, that's JAYYEH, on almost every platform. I respond to DMs and newsletter replies, so hit me up. This episode was produced by Paige Randall.
Hey guys.
Thanks also to John O'Lee from Adamant.
Hey everyone.
And as always, one last thanks to our sponsor, Vanta, the leading automated security and compliance platform.